want to split Safaricom, M Pesa, and all these other things.
Can a government pass a law and say, on the basis of this law, specific for you, that you must do things this way or that way?
And recently we have seen Nedbank interested in NCBA. Is it that the economy is performing well to attract more money?
The economy is very well diversified. I mean, I've just had a conversation around data centers today. So there's a lot of investment going into ICT infrastructure. And then now you've got all these levies that the government is securitizing. Those are opportunities also for the larger banks.
Hello, everyone, traders, investors alike. I think this year we have been doing a bit different on Bullish Banter, and we continue that tradition of macro. And today we have a different guest, and he's familiar online, at least for those who are active on X. Him and Rufas do, a bit of bantering with the top honchos within the economic planning in Kenya. So I hope it will be a proper bullish banter experience. I'm your host, Jesse. Of course, Rufas, how are you doing?
Doing well.
Yes. Bitcoin is going down. We are discovering new lows.
Yeah, 69K today. I think officially we're in a bear market.
It's good to accept yourself. It's very good. Yeah.
We fully accept.
Yeah. Okay.
Yeah.
All right. I'll let the guest introduce himself and what he does for a living.
Yes, my name is Johnson Nderi. I wear many hats.
Yeah.
Economic analyst. I like to say student of economics.
Yeah.
But I'm properly in finance.
Yeah.
And my day-to-day is I raise funds for entrepreneurs.
Yeah. Okay.
Yes, good to be here. Learned that Bitcoin and Juventus are sharing the same fate. It is a macro story.
For those who trade shares, you can check this performance of Juventus FC stock performance over the last 5 years. It's an interesting chart, but now for Bitcoin, it's just this year to date. Yeah. So traders, we are trying to bridge something different. I'm sure you have been checking what is happening in the global market since Trump came into power. Fundamentals shifted the markets both globally and in Kenya. And we will try to make sure that the guests we bring fit into those calibers and definitely deliver some understanding into those topics. So tuanze nyumbani. Is Kenyan economy bullish? Yes.
It's a hard question to answer.
Okay.
Only because, well, we are a resilient people.
Mm-hmm.
We fight. We fight, and the reason why we are still breathing today is partly because of that very diversified economy.
Yeah.
Very internationally connected.
Yeah.
I've been able to advise a couple of guys with international, whether you're talking about local manufacturers with international sourcing material internationally or manufacturer exporting.
Yeah.
So there's all that, but it's hard to ignore the impact of government and primarily fiscal policy. Actually, a lot of what you're facing right now, whether you're talking about monetary policy or just the economic environment, can be linked directly to government fiscal policy.
Maybe,
and going all back the way from 2012 to now.
Yeah. Maybe you can explain a bit, define monetary policy for those who are novice and fiscal policy.
It's hard to understand.
Because I know we'll repeat it a lot.
Yes. So monetary policy really is about amount of money in circulation.
Mm-hmm.
That's basically what it is.
Yeah.
A lot of people like to link it to inflation rate, exchange rates, interest rates, and yes, it does impact all that.
Yeah.
But ultimately, it's how much money is in circulation at any given time.
Yeah.
And therefore, even when you say inflation, really what you mean is just increasing money supply.
Yeah.
That's the primary definition of inflation. If you went back to just before 1980
Yeah.
and you check the definition of inflation, it'll that's what it comes to.
Okay. Fiscal policy.
Fiscal policy is really about how government funds. It's really about government funding and expenditure. So that's why you talk about taxation.
Yeah.
That's why you talk about government borrowing.
Yeah.
That's why you talk about government spending.
Yeah.
And all in the budget.
Yeah.
It really just a budget. And of course, governments use spending, taxation and spending for different reasons.
Yeah.
Some governments want to use spending to grow the economy.
Yeah.
At least they think they can.
Okay.
And some obviously just about funding. So that's what. So the fiscal policy really just speaks to the philosophy of government.
You don't believe
Plus
they can.
borrowing, especially for African governments.
Yeah.
No fiscal policy.
Let's start there. We have had Moody's, Fitch, S&P improve our ratings recently, and I think you have heard from government financial advisors saying and economic advisors saying some of the policies they have implemented have sort of addressed such so that we do not have pressure. I think we have spoken on this before that the can is just kicked very far from the road. But also we have seen the Kenya shilling exchange rate stabilize against the US dollar, but not so much against European currencies. What do you make of such?
So let me start by discussing the rating.
Yes.
Remember, this is a dollar rating.
Yeah.
Suppose we discuss shilling ratings. So shilling's ratings, Kenya will always be either AAA. Okay, let's not say always, but I mean, it's a reasonable assumption to say you can't default in your own currency.
Yeah.
Why? Because in addition to taxation and borrowing, you can actually print the money.
Yeah.
So technically speaking, you're not defaulting.
Yeah.
So your shilling rating is AAA, right?
Yeah.
Now, or rather, the government's
Triple A.
yeah. Now, that international rating is a dollar rating. Had it been a euro rating, we would have been talking about something very different.
Okay.
Because, like you point out, the euro strength is strengthening against the shilling.
Yeah.
But the dollar is not just weakening against the shilling; it's weakening against almost everybody. Right?
Yeah.
And in fact, it wasn't until Trump appointed Wash that we saw some sort of reversal.
Yeah.
So, in my view, I was going to segue into your second question, what I make of it. So, first of all, it's important to note it's a dollar rating.
Yeah.
And then this dollar rating, why did it improve? Is because the US, they've got this crazy debt as well. And Trump has this spending appetite.
Yes.
It's not just Trump, actually. It's him and Congress, right?
Yeah.
And their debt servicing is actually quite high. I think this is the first last year, but maybe it was the year before. I think it was last year. It was the first time US spent more on paying interest than they did on
The defense budget.
and the defense budget.
Yeah.
Right? So so everybody knows this dollar business is a bit shaky. And this has been the case since 2008.
Yeah.
However, this time is sort of different because of also Trump's belligerence towards peers. So guys asking, okay, really, why are we buying US government bonds only for him to turn the same our money against us? So there's also been some level of dumping of dollars.
Okay.
And that has led to a weaker dollar. Even if they didn't print, because what usually brings about weaknesses when you hold everything constant is really just about differences in monetary policy
Yeah.
between central bank A and central bank B.
Yes.
But even if they just didn't print,
Yeah.
just the dumping of the dollar alone will weaken it.
Okay.
But what does that mean for people who borrowed in dollars? It means it's easier to pay.
Pay. Okay. So they are benefiting from mistakes or other.
Yeah,
Historical-
the forex game is two-sided.
Yeah.
You have to remember there's a central bank on the other side.
Yeah.
There's a fiscal policy on the other side. So the same variables you have locally, they also exist on the other side. And the exchange rate then is a balance out of those two factors.
Okay.
Well, I would say what since August 2024, I believe that's when Kenya pegged $129.5.
Yeah.
I think it hasn't moved much
Yeah.
since August 2024. So what we have seen over that period is that if you measure the value of the dollar against a basket of other currencies, using what we call the dollar index, you notice that it has been down over 10%, meaning that generally the dollar has been losing value. So by pegging our currency to the value of the dollar, then we have also got down 10%
Okay.
versus the same basket.
Okay.
So technically, we have devalued our currency.
Okay.
Yeah.
Yeah, we imported
The-
US monetary policy. That's how you peg them.
So is that a risk to us, maybe, or is it an advantage?
No, it's
I think
I was gonna use strong language. Because essentially, when you devalue currency, you're impoverishing your people
Okay.
because you're taking away their purchasing power, right?
Yeah.
But we've been doing that to buy dollars.
Yeah, because I think from the latest report, we are around 5.4 months imports cover from the CBK reports.
Right.
Yeah, and I think it has been almost increasing by around 300 million every week or something like that.
If we had bought gold, we'd be in a much better position to pay our dollar debt than if we are buying dollar-based instruments.
But now we have 18 kgs, so
20 actually. It's 20.
now
I have a question for you.
yeah,
Let's say the import cover expands, let's say, for 5 months, let's say
7
12
months. Yeah.
Yeah. How does that help Kenya?
So, nominally, one would argue. So, holding everything constant, it just means that you're able to meet external obligations easier, or rather, we've got, shall I say, more security and or the ability to pay dollar obligations is secured.
Yeah.
And obviously that could also mean that then you're a good credit. You're a good, is it debtor?
Yeah,
I
data
mean,
because you pay.
You're
good
very
credit-
attractive to lenders, yeah.
Yeah, you're credit worthy, right? So you're a good debtor.
Yeah.
So holding everything constant, or let me say nominally, that's the implication.
Yeah.
Yeah.
Things which might affect your fuel prices, import of goods.
No, but you see,
That doesn't change anything.
But you
It
see-
just means that the central bank has more money. That is it.
yeah,
Okay.
and the central bank being belonging to the government,
Yeah.
the government can pay itself a good dividend and pay its.
Yeah.
So there is no ideally direct impact to my value of savings or something like that.
If that position was achieved without inflation, then yes, there will be no impact.
Okay.
But the way we've done it,
Yeah.
there will be an impact.
Okay.
Obviously, seeing it via what we call inflation now, CPI,
Yeah.
where it doesn't tell the whole story, but it's part of the story.
Okay.
So when you print money, see those shillings are still here in circulation.
Yeah.
You've just printed money and bought dollars from
From the market.
banks.
Yeah.
So now your shillings are in circulation.
Okay.
Now people are poorer. because you've got too much money
Okay.
chasing fewer goods.
Now, on to bonds. I think over the last year, bonds achieved the highest volume traded.
Right.
And you are part in that. You have been a bit part of that sector, and people have been interested. Retail investors have been interested. CBK made it easier for you to buy some bonds. The rates, at least at the time, excuse me, was around paying like 15, but now it's gone down given CBK has been cutting rates. Is it something that, if you are a novice to that space of investing, worth it going into? Or you can look into other assets as you try to understand it, given that we are in an interest rate cutting environment? And I believe it's directly tied to what you get in return.
Yeah, I hesitate to say we are in an interest rate cutting environment. We ought not to be, because when you're cutting rates, what you're saying is you're going to increase money supply.
Yeah.
That's how you bring rates down.
Yeah.
It's not command, in the sense that you must lend at this. Although there's a bit of that.
Yeah.
That you must lend at this rate.
Yeah.
But the exchange rate, I mean, the rates that, like, say, government pays,
Yeah.
which is a good proxy, is really linked to money supply.
Yeah.
So exercise judgment. 4% per inflation per annum for me is too high.
Mm-hmm.
That number ought to go below 2 if it can.
Okay.
Right?
Yeah.
But you've got all these guys who keep telling us that interest rates ought to be, I mean, inflation must be higher than 3% for economy. I think that's hogwash. Growth is actually deflationary.
Yeah.
So it's just government selling a story to make itself look good.
Okay.
Because they're saying, until they say inflation, chances are you're not doing well.
Okay.
But the truth of the matter is, inflation actually hurts. Because if you look at even the US, a very good example, the Gilded Edge.
Yeah.
The way people got rich in the US at that time is because prices went down across the economy under the gold standard.
Yeah.
So, and it's natural, because what you're saying is, when you're producing more and more, I mean, even from a demand curve perspective,
Yeah.
the more you produce, or rather, if you want to sell more, the demand curve has to slope downward,
yeah.
so that Q grows as price comes down.
Yeah.
But you see, economic growth focuses on Q. So as it goes to your right, that means prices must be
Falling
coming down.
Yeah.
Yes. And then if you look at it from even now, in real terms, things get cheaper. In real terms.
Yeah.
Because even if in nominal terms prices have gone higher, if you check how much man hours it took to buy a loaf of bread, for example, if that economy is set right, that unit trends downwards. That the variable trends downwards.
Yeah. Okay. I'm asking that because last year banks made a lot of profits.
Nominal, yes.
Right? And most of it was by basically holding government paper. And everyone was like, oh, NSE is performing very well, right? Yeah. And recently we have seen Nedbank interested in NCBA, Standard interested in NCBA, ABSA looking to acquire another bank to expand their foothold in Kenya. That's why I asked you, is Kenya bullish, Because there's a lot of M&As activity looking to set up for the better part of this year.
Right.
Yeah. So is it that the economy is performing well to attract more money, or is it that the economy is stable enough such that there is enough, I would say, investable assets that would bring foreigners directly into the country?
That's what I was saying. The economy is very well diversified.
Yeah.
So when you look at, I mean, I've just had a conversation around data centers today.
Yeah.
I mean, we are positioning ourselves for participating in that in a big way.
Yeah.
So there's a lot of investment going into ICT infrastructure.
Yeah.
Right? So that's an opportunity. And then now you've got all these levies that the government is securitizing. Those are opportunities also for the larger banks.
Mm-hmm.
Then don't forget that we are also consolidating the banking sector
Yeah.
by policy.
Yeah.
So the CBK has said that by 2029, minimum share capital ought to be 10B.
Mm-hmm.
So maybe in a much more concentrated market, the bigger banks will be better positioned
Okay.
to take because right now, I mean, really depends on how you do your banking. I always say it's not what business you're in; it's how you do it.
Mm-hmm.
And there's some small banks that are thriving because they're able to respond faster to the market.
Yeah.
And the big banks, they play on volume and yield curve differentials.
Yes.
Because they have got the distribution infrastructure to be able to raise cheap funds.
Yeah.
There's another dynamic that might be running counter to that, and the rise of money market funds.
Mm-hmm.
SACCOs.
Yeah.
So it might, yeah, but mostly money, because then money market funds are chasing is a much more sustainable business.
Yeah.
Because they fund, unlike SACCOs, which are obliged to serve their members. Investment companies have the freedom to invest where the returns will yield the highest.
Mm-hmm. So this would be MMFs,
yeah.
NCISs, yeah?
So that's sort of restructuring even our financial services sector
Okay.
completely.
Yeah.
Banks will find themselves in competition because
Mm-hmm.
incidentally, these guys are able to lend at a lower rate than banks.
Yeah.
And they're able to deliver higher rates to
Returns on savings.
investors.
Yeah. So that is the direct benefit I would get if I choose, let's say, not to go to the big 9 banks,
Right.
but I'm also able to go to the small circles from my village everywhere. I get what? 100,000 at 1%, as opposed to 100,000 at 12%.
Yes.
Okay.
So you a money market fund, for example, you're able to do 10,000,
Yeah.
and you'll be able to participate.
Okay. Do you think now the entrance of these international banks should have an impact now on, because like I said, ICT services are growing. Entrepreneurs are definitely looking for capital. And I think some entrepreneurs have raised the case, and I think why the government is involved with all this project, that make it easy to lend. These international players might change the dynamics in the markets.
They do. They might.
Uh-huh.
Because they're backed by, especially the South African ones,
Yeah.
by serious balance sheets from SA.
Yeah.
Remember, SA has one of the largest pools of pensions in the world.
Mm-hmm.
It's quite impressive.
Yeah.
So if Kenya has access to that,
Yeah.
and they're also looking for ideas. SA, there's something wrong there.
Is it that it is wrong, or maybe they have just, let's say, optimized their market?
No, like US right now is ahead of SA, but there's still a lot of FDI going into US.
Yeah.
So there's something SA is doing wrong. That because what the adage, those who have more shall be given.
Yeah. Okay. Interesting.
So if you do it well,
Yeah.
if you run your economy properly, if you have a good savings pool, you will find that foreign investors will be looking to co-invest alongside you because you have expanded their universe of investable assets.
Yeah.
And there's something you're doing right.
I would argue that South Africa is the economy is miles different from Kenya's structure. Like if you look at the stock market and specifically last year, all their mining stocks were up 100, 200, 300%. 3.8 to everyone.
Courtesy of gold.
Yeah.
Of
course.
They're gold mining.
Gold and silver, basically.
Yeah. You go back around COVID,
Yeah.
when there was a shortage of oil, prices skyrocketed. You look at countries like China, they started reverting to coal. Their coal companies are doing 100, 200, 300%. So for the last 6 years, the stock market has been consistently gas creating value over time.
Yeah.
You look at the banking sector is doing really well, agriculture is doing well, and also their big move in joining the BRICS also enhanced their integration with the big countries. So now they're able to do more business, especially in the business of financing. Financial services, it's way better compared to before joining BRICS.
Yeah.
So Mango's origins, like Kenya, perhaps we do a comparison with Somalia, Uganda. That makes sense.
The question I was trying to answer is why would they focus on Kenya? Yeah, like look, they essentially they have a choice. For every shilling they have that they are taking to Kenya, they have a choice of investing it back home or elsewhere.
With a higher return, potentially.
We are assuming that Kenya has a higher return. Otherwise, they would have done it. Or maybe it's just a diversification play.
Yeah.
Most likely a diversification play. Or expansion.
Expansion. Or because where will tomorrow's growth come from?
Yeah.
Right?
Yeah.
So yeah. We've crossed the threshold, I guess, in that sense that but I'm still inclined to believe there's something wrong in SA. So that's why they're looking to
Safe haven, store something aside while they...
outside the...
I think Ethiopians are thinking the same. They're like, Safaricom can do business. Where they come in here.
Good that you mentioned Safaricom. Now they are being split.
Are they? I don't know. Have not been...
There's been plan and talks to split Safaricom. I think there's a bill in parliament regarding that. So there are mergers in the banking sector, but they want to split Safaricom, M Pesa, and all these other things.
Yeah. But it will be tough for this reason.
Yeah.
There's a question of private property rights.
Who wants the numbers and the digits?
Yeah, can a government pass a law and tell you on the basis of this law, specific for you, that you must do things this way or that way? It doesn't belong to government. The asset is,
I mean, they have opted already to dispose some shares in it, yeah?
Even if they maintained, it doesn't belong to government.
Okay.
You're not free to chop and put it together as you want. You can pass some regulations that are cross-cutting to everybody. But you really can't pass a bill to say, from today, Safaricom must be structured like this.
Okay. So you don't think...
I think that will be unconstitutional on the grounds of property rights.
Okay.
Well, it's easy to go around, as long as these guys...
Antitrust, to say they are a monopoly.
Yeah, you can even say it's a strategic national asset.
No, you can't.
Considering the amount of data they hold, citizens can.
No, you see, government, are government emails strategic assets? One would argue yes.
Yes.
But they're on Gmail. Can government therefore go and tell Gmail, you must structure your business like this because you host our emails? No.
Yeah.
They cannot say gmail.k is a...
You've got a service, you bought it.
Okay.
On the basis of that purchase of that service, you can't then say, because we bought a service from you, this is how you're going to do this.
But the argument is, not only do they offer funds transfer, they also offer loans. So they are a lending facility. They also offer Mshwari. There's a saving facility.
Actually,
now they
those
offer...
are not Safaricom products.
Yeah.
Safaricom only delivers the tech for that.
Okay.
If you go to see, if you defaulted on Mshwari, if you go to CRB, your lender will not read Safaricom. It will read the NCBA or something.
Okay.
That's the lender.
Now they do offer what? Stocks trading.
Yeah. Again, you'll find there's another broker behind. They're just offering the tech because they quote unquote own. I mean, they give you access to a huge number of people.
Okay.
So they're able to say, look, we can create this product for you. You offer it to these guys.
Okay.
And then we'll brand it as though it's ours.
So it's now the customers to be wiser and decide, okay, I will get Airtel, I will get Telcom, I will get Jamii, whichever telecommunication service I want to use, and not be forced or beholden to Safaricom because of the convenience of M-Pesa. Is that the case now?
Yes, Safaricom is super convenient. So convenient, I don't think even guys check prices. But
The transaction fees.
they're, yeah.
Well, I would say, if you go back to 2020,
Yeah.
when governments around the world were cutting interest rates in order to try and save their economies, what they were doing, for instance, the US was printing trillions and giving the $100 checks per household, right?
Yeah.
So Kenya was also doing something similar, but somehow the central bank could not transmit monetary policy without Safaricom. So what they did was offer zero return transactions to a certain limit, right?
Yeah.
So Safaricom was a tool of monetary policy transmission to the country.
Yeah.
So if you don't understand, that means that the company itself is very strategic, and I would say it has national interests in it.
Okay.
So if the government really wanted to support Safaricom with M-Pesa, it would do so.
I mean, ultimately, we can say the government will do whatever it wants.
Yeah.
But those are the kind of things that you'll see reversals
Yeah.
after court.
Yeah.
Because what you're doing is anathema to the constitution itself.
Okay.
Again, property rights. The KPLC, when they were creating
Kenyan.
no
Ketraco.
Ketraco.
Yeah.
Ketraco was supposed to have high value, high is it high, not high value, high voltage transmission lines.
Yeah.
Yeah.
But they didn't take KPLCs. Why? So whatever KPLC already owned, it owned. So because of property rights. Remember, KPLC is 50% public.
Yeah.
So you can't alienate somebody from his property without just compensation.
Yeah.
So, I mean, one could argue they could actually have passed a law and said, if you're this kind of company, you should not own this. Then KPLC will have been forced to sell. But there are other realities that force you not to do things that way.
Because you'll have to create mini laws, a lot of mini laws just for convenience of every transaction you want to do.
Also, what does it say to foreign investors?
Yeah.
That you're essentially forcing people to sell, but there's no market. So what is the price discovery? How do you ensure that KPLC is not KPLC investors are not undercut, or
Okay.
or they don't feel like they've been stolen from.
Okay.
So there's a lot to consider, and that's what I'm saying. It's not just as easy as passing. There's you have to. It's a lot to consider. You've already chased Coco away. Do you want to chase?
Well, there is an allegation that those days were having a scam with selling carbon credits without paying taxes.
I'm more inclined to believe Coco guys, just because of who their shareholding is.
Yeah.
And they of course had to make applications to government, and I know government is in a tricky position.
Yeah.
They're squeezing everybody, man. The woe unto you if you're found on the wrong side of KRA. This is a government that is looking for money under every nook and crack.
Yeah.
Okay.
So
Yeah.
you need to look at this in that context. I wouldn't That's what I'm saying. I will be more inclined to believe in Cocoa first because I know government has been and is very aggressive in tax collection
Okay.
to the extent where they flirt with breaking the law.
Okay. Okay.
And in fact, how many slap downs have we seen from the courts to KRA in various positions because they're breaking generally held principles in pursuit of money.
Okay. On to, that is a very heavy topic, so on to the global matters. Gold has been going upwards. A lot of commodity, silver and everything is going up. And you can say people are divesting from the dollar. From the US Treasury sales, the numbers are not looking like people are actually selling. They are just not buying. And it's because maybe some are just avoiding that risk or exposure. But then again, there is this aspect whereby if you please Trump appropriately, you'll get favors. But Qatar didn't get that favor given the way the immigration laws were passed, and then they were also subject to a visa after giving him a Boeing. How do you think the world investing landscape would be in the next few months, especially given what is happening internally in US and obviously the fracturing of, I would say, global trade agreements?
Yeah, I mean it's interesting. I was looking at manufacturing data, and apparently, manufacturing is worse off because of Trump's policy
first.
on trade, right?
Yeah.
And that's a big problem for them because the question is why is it manufacturing going the way he thought it will go because of protectionism. But people often forget somebody's output is somebody else's input. So the people who are importing steel, for example, are now having to buy more expensive American steel. Why? Because Trump wanted to protect local steel.
Yeah.
But what does that mean for guys who use steel as an input? It means they pay more, right? Are you competitive when you pay more?
No.
Right? So, and some of these guys, the US is very externally connected. So when you can't compete with Japan, when you can't compete with China, like for us guys in Kenya, we import quite a bit of Chinese-based machinery. Yeah, in fact, it's interesting. Even you'll find that some German, Italian, or just as generally European producers are moving production to China because
it makes sense.
It's you're more competitive when you produce in China than when you produce elsewhere. So that has to do a lot with monetary policy.
Yeah.
It has to do a lot with also fiscal policy, taxation, and whatnot. So it's really about competitiveness, right? Impact of policy on competitiveness.
Yeah.
So Trump has really eroded U.S. competitiveness, and that's impacting, ultimately the dollar, because if you're making it more difficult for people to produce, then they'll produce less. What does that mean for
jobs market?
Yes, and you can see it even in their jobs numbers. It's problematic.
I mean, right now I think they'll be delaying NFP, and then when it drops one, it's because they shut down and then they came back, so more people came in. I think that's how I've been viewing the NFP data. There are many categories of data if you look at the data properly. Yeah.
So there's I think U6 trends in U6 are very telling. U6 I can't remember. I liked to follow the labor force participation rate. Because also that's I mean, you could say there was a lot of financial engineering throughout from Bush, because if you look at the LFPR, there's been a steady downward rate.
Yeah.
And that correlates with hardship people are facing and whatnot.
Yeah.
So if you look at all that, you're forced to conclude that not everything is going well in the US, and perhaps that's why they even voted for Trump. You know, that idea, this guy is so crazy, it might work. Because the usual solutions that you've been sold to for the last 5, 10, 15 years have not worked.
Okay.
I think it's something to do with labor. Labor has been one of the worst, one of the worst factors in the US.
Okay.
Having open borders to Obama, and out like then, all those guys coming into the US, they really made labor very cheap and stagnant. So while on one side, companies really make money. If you look at the Walmarts, you look at retail chains, Amazons, they really make good cash out of cheap labor. But now Trump is kicking out that labor.
And now, you'd be surprised, under Obama and Biden, they actually deported more than Trump himself.
Yes, it's true.
So I always look at the argument and I'm like, he makes a lot of noise about doing nothing.
No, but he's really he's made some almighty messes. Remember the South Koreans he kicked out?
Yeah.
That was highly qualified labor, and that man. So essentially, by kicking those guys out, he was telling those guys, the employers, you need to move out to where these workers are.
Yeah. And collaborate on trainings and stuff like that.
Right. No, I mean, you wouldn't even get there because you're not a university, right? So you'll produce where the workers are.
Yes.
The reason you have those guys here is because there's no American who could do that job.
Yeah.
Right? Because it's highly skilled.
Yeah.
I wouldn't say, you see, if you look at the average Kenyan, here we do what? $2,000 per annum?
Yeah.
Yeah, thereabouts. But if you go to the US, you're doing 30, 40, 50,000, maybe even $80,000, right?
Yeah.
Your labor has not become cheaper. Yeah. You went there, and by virtue of the way they've organized their production, they are able to multiply your effort to a level where you're earning that much. But you did touch on something. This is what it is. Because of, and especially because ever since Obama, ever since GFC, maybe even before GFC, ever since Greenspan, 2001, 9/11, right? These guys have been printing. They blew up they created the housing bubble to escape the .com at 9/11, right? Then that blew up. Then you printed more dollars to reflate the US economy. And then now COVID came, then now, like I think 80% of all the dollars in circulation now were created in the last 4 or 5 years.
Okay.
Crazy numbers, right? So what is that doing for the US producer?
AI.
It is hurting their ability to produce. Right?
Yeah.
It is the average manufacturer. You're making it more expensive for them to replace their capital. So because things like depreciation are notional. And now under variable currency value, it becomes very difficult to estimate what your true profit is.
So live with accumulated inflation, especially since previous Trump tenure, then COVID during Biden, now Trump.
Around 5.
We are looking at what, 25 to 30%.
And that's if you're working. I assume you're working with the CPIs.
Yes.
Stated CPI. Now go to the ground.
Okay.
Let me channel Peter Skiff arguments here. Go to the ground and find out how much they bought a particular machine. And they're now replacing it 10 years. It's about maybe machines of life cycles of about 10 years maybe. Now check how much it costs to replace that machine. Chances are, whichever company is faced with this, replacing that machine will shut down.
Now, okay.
So that's what we call that capital consumption. So when you say it's difficult. You know, there's that line in economics where you say it's difficult to plan under inflation. It's not so much that the prices are volatile.
Yeah.
It's especially capital goods. It becomes difficult to estimate how much what your true profit is, because the true profit should be the monies you make over and above replacing the equipment.
And expenses around it.
Yes. But if you are not able because of inflation, and you know, machinery is not captured in CPI.
Yeah. Interesting.
Yeah, so you consume capital.
Okay.
So when it comes to replacing that machinery, you'll find you either have to borrow or somewhere, whatever, and if you're not capable, then you just shut down.
Is it similar to what's happening in Kenya? Now the government is proposing to remove that PS1 tax on 30,000 shillings per annum.
Yeah, so yeah, that's I don't think that's a competitive question or competitiveness question, although it will impact competitiveness. It will improve your ability to hire, because then your cost of especially the lower cadre of workers, the cost of hiring and maintaining those will be lower.
Well,
But
the way the take place, since let's say, okay, I will reference COVID again. So since before COVID, all we have seen is accumulated inflation just increase. Then anyone who's let's say earning what to 3 to 4K, if they got some more raise, they are eventually around the bracket of 30K. But at the same time, the brackets, the tax bracket, really haven't changed much. So it's a situation where everything goes up. The prices go up, your salary goes up, then taxation goes even heavier, and the government realizes it's taxing inflation.
yeah, so yeah. No, actually,
Yeah,
inflation is a very big source of government revenues.
Yeah.
If you want to know, get a good idea where our economic growth is, just take growth in tax revenues, especially when there have been no additional new tax rates. Take that, then subtract inflation, and now you're sort of adjusted for changes in prices. So now you'll have only either growth or shrinkage as because you've factored out price changes. Now it's just output changes that you'll be left with. And you're right. The problem with that, so yeah, you even if you get income raises, and I think Americans have done, because they've got changed CPI in some of their, they've got CPI built into their labor contracts. So you what you're trying to say is you're trying to protect how much you earn in real terms.
Yeah.
If you are earning 10 loaves of bread in 2020 and 2025, if you got no promotion, you should still be earning
10 loaves.
yes.
But not the a whole loaf in packaging, the shrinkflation, whereby the package is still 100 grams, but the slices are 13. So it's 10 loaves, but instead of 24, it's 13. It's still a loaf, just smaller slices. There is
Shrinkflation.
Yeah.
Yeah, that's one of the ways inflation manifests itself. Yeah, so the purchasing power must be remain the same. The problem with and this is why measuring inflation is very difficult. First of all, we've already spoken about the idea that we don't factor in machinery into CPI.
Yeah.
But even the quality of goods changes. I think the only product that doesn't change over time has been gold.
Yeah.
So it's a very good measure of inflation. Not the best. It has its own dynamics.
Yeah.
But it will tell you how much in purchasing power you've lost over time.
We saw
it's the same metal.
Yeah. We saw it rise, 60% last year, 40% the previous year. This year it's up almost 16%. Most of our traders obviously follow it. I hope you have learned something about macroeconomics. If it was tough, let us know. We'll try to simplify it next time, so that we give them something to look at, to intertwingle with this. You have said manufacturing is slowing down in the US, so that means that ideally consumption of oil will definitely reduce in the US, given they produce their own. They have basically free oil from Venezuela. And acting president, and then Europe, they get basically free protection and they give oil. Europe is moving to Asia. They have the EU basically signed a new deal with India recently, although they are with China as well, and they are moving production. Is it likely to have an impact now on the commodity pricing? At least maybe gold will stabilize in price, and then now oil will a bit get a bump due to that.
It's a tough question. First of all, I'd like to ask myself whether EU is joining the BRICS.
That's a good one.
So anyway, my point is here's the deal. Are you pricing commodities in dollars? Because now there's a trend, in my view, that has taken hold.
Okay.
And you mentioned de-dollarization.
Yeah.
So it's a fair bet to say that 5 years from now, oil in terms of dollars might be a lot higher. Not because oil has more demand, but because dollar, fewer people are using the dollar.
Yeah.
So, I mean, the question is, do you really want to put money in dollars, tracking prices going up, but what you're buying really is a weakening asset?
Okay.
You're basically saying that the petrodollar is collapsing.
What I'm saying is the value of the dollar today will certainly be the value of a dollar 5 years from now will certainly be a fraction of the dollar today, largely because their debt is unsustainable. Yeah. And we know they won't default.
Okay.
They won't do a hard default.
Okay.
They'll try and print their way out of it. How much they'll be successful, we don't know. But I guarantee you that's what will happen.
Interesting. On the investing side.
So I'm bearish on the dollar.
Yeah. What are you doing about it? Like, do you have a short position on the dollar? Are you going gold?
I always said.
Where are you looting?
So that's a tough question to answer. But if I were trading, right now I would put assets in dollars, in gold, largely because it's a bet against dollar. It's a bet against fiat.
Yeah.
Right? And we are on a one-way train. It's not going to be easy turning this train around.
Okay.
Yeah, because of you're firmly in the tracks. Like somebody, I know somebody who I read always used to say, inflation is baked in. You can't move away from it. Trying to move away from it might cause social upheaval.
Okay.
Maybe you can get a melee and turn things around. Maybe, but
it's a bit difficult.
They're more likely to vote a Trump than a melee.
Well,
they're Ron Paul.
we can always see some stuff happening, especially in gold. For instance, last week we saw silver was
10%.
2% within the space of 2 days. Gold was down, it was 21% within the space of 2 days. That's the trading. Fast forward to this week, last night, from the session's high to low, silver dropped by 18%, but gold dropped by 6%. Now we are seeing increased volatility across different metals. These are the same metals that for silver was up 59% last year, gold was up 60%. We think that when investors are trying to bet against the dollar, we will handle that kind of volatility of their portfolio.
They better. There's gonna be a lot of upheaval. I mean, why did this happen? It's because Trump nominated Wash for Fed governor.
So it was just a temporary market positive sentiment and therefore buying of the dollar and not,
Yeah. So yeah.
I think it's a correlation, not a causation.
Okay.
Like, how did that, like, seriously impact? Okay, where did the money go? Because a lot of people lost. Didn't go to Walsh, didn't go to Trump. David, who is the other player on the other side of the trade?
Yeah, no. So if you are long silver and you're long gold, maybe even on a leverage position,
Yeah,
and you hear Trump has hired Wash,
yeah,
and Wash is known to be a hawk, for example,
yeah,
a dollar hawk.
yeah.
Why will you still stay in short the dollar?
Well,
Because you're now sensitive.
yes,
You're a bit sensitive. You can't. You're not trading on trend.
yeah.
You're trading on
Fundamentals.
volatility.
Yeah.
Well, the silver short squeeze started all the way back in 2021 when retail started going for fiscal policy. Starting up, and they have been doing that for a long time.
Right.
So fast forward, the hedge funds joined, the investment funds joined, and now everyone was just bullish silver. Then at some point there wasn't enough silver to sort the maturing contracts in the London market. Do you remember that time we had to import from Shanghai? That was about a month ago. So right now, the traders who have silver, they are not affected by financially because they are still holding their physical. They're just watching the price on chart. But then the traders who are holding the leverage positions, now those ones are getting. Yeah. So with
You're getting
increased-
margin calls.
yeah. So with what happened with CME adjusting the margin, made it even worse.
Yeah.
Yeah.
So what maybe
So does that change the fundamentals of silver or
No,
it's just manipulation?
like I said,
Yeah.
inflation is baked in the cake.
Yeah.
The problem with silver is that it's not a pure monetary metal.
Yeah.
It has some industrial demand.
Yes.
Yeah.
So you can't attribute everything to dollar, to money.
Yeah.
There's also it's also used in
phones and
Solar,
on the
EV.
solar bed, EV because it is here.
yeah, but then you've seen demand of EV collapse.
Yeah.
And not just this is a global phenomenon. you then there's the data centers again. That's a silver play as well.
Mm.
Yeah. So I mean, to actually sit down and divine the direction of silver is much more difficult than gold.
So what would you say would what are the indicators besides, of course, Kevin Wash, which is now more or less done? What are some of the indicators this year you would be watching that can maybe play a part in how the dollar either strengthens or weakens in the course of the year?
So U.S. foreign relations,
Uh-huh.
very important,
Yeah.
because now it's not about necessarily about purely monetary policy
Yeah.
on both sides of the trade.
Yeah.
Now you're also talking about there's a strategic concerns as well. So you can't ignore that. We don't know whether US will strike Iran, Russia and
Greenland.
China have made warring noises.
Very serious about it. It's like Iran, there will be consequences.
I saw a report today morning. We are recording on the 5th of February. They are meeting tomorrow. That would be 6th at Oman. So clear.
Yeah.
I don't expect anything because I know how Trump rolls.
Well, there was also a meeting earlier in the weekend. It was actually positive. Iran and US.
Same one they had in Qatar.
Yeah.
I think this one is gonna be tough because unlike the previous allies of Russia
Yeah.
and China, Iran actually produces what do you call this? Those drones,
Yeah.
Yeah.
the cheap ones,
Yeah.
and those have really been very helpful to Russia in
Yeah.
the war in Ukraine.
Uh-huh.
So Iran's survival has a bearing on the war of Ukraine.
Okay.
And if you cripple Iran, you have actually crippled
Russia.
Russian defense capabilities. So the question is, will Russia sit on the side as this happens?
Bullish. Well, I think this has been a nice conversation. For traders, of course, I know you might have some questions. Don't forget to play rewind a bit.
Yeah. One last thing.
Yeah.
KPC. You buying the IPO?
I'll say just this.
Yeah.
In terms of valuation, given the metrics, how does KPC compare to KPLC?
KPLC is better. My personal opinion, not an investment advice.
I'll leave that as a question posed. Yeah. You answer yourself. Answer that for yourself.
I think by the time this episode goes out, the IPO session will be over 14th. So I hope you would have enjoyed your Valentine's. Nderi, where can people find you and interact with you and your work, perhaps?
I am on at Nderi J and Nderi_J on Twitter.
Okay. Rufas, any last remarks?
Well, I don't know. It has been quite a nice session.
Yeah.
Normally we try to keep light up for our audience, but then this is the
Traders, we'll be back with traders, don't worry. Other than that, don't forget to like, subscribe, and share.
So the next Bullish Banter event, physical event, will be on 21st of February. We'll be having yet another debate. So if you enjoyed the last one, make sure to set the calendar. We will provide links on our socials.
Till next time, stay bullish.